Hi, I'm Matt Joblin and welcome to IPgO, the show that takes a look at the IPO world, past, present and future. Now, at the start of the corona crisis, we covered special purpose acquisition companies, or SPACs for short, and looked at how they were likely to dominate the landscape in the near term. So far in 2020, they have raised $10.4 billion through US IPOs and are on track to exceed the 2019 record total of $13.6 billion. Well, today we're going for the mother of all SPACs, one launched by billionaire investor William Ackman, who is looking to raise $3 billion and will commit at least $1 billion from his hedge fund, Pershing Square Capital Management LP. For perspective, until Ackman entered the arena, the largest SPAC before was Churchill Capital Corp, which raised $1.1 billion. Ackman, who we've also covered previously in Smart Money, runs a New York-based hedge fund that manages more than $10 billion in assets. And according to a filing with the US Securities and Exchange Commission, can make additional commitments and boost the size of the capital raise to $6.5 billion. The SPAC will be called Pershing Square Tontine Holdings Limited, and it plans to go public with 150 million units at $20 each, according to the filing. A tontine company which gives a slightly different twist on its structure. Tontine firms represent an annuity shared by subscribers to the common fund, and the shares increase as subscribers die until the last survivor enjoys the whole income. Now, typically a SPAC will use an IPO proceeds and borrowed funds to acquire a company, usually within 2 years, and investors are not notified in advance which company a SPAC will buy. Ackman said in the filing it will seek to acquire a venture capital-backed company that he called a mature unicorn, which has chosen to remain private. Nevertheless, this SPAC is driven by dislocations resulting from COVID-19 and will be focused on 4 intersecting principal areas of investment. These areas are high-quality companies desiring an IPO but do not want the risk and expense associated with the IPO process. Mature unicorns that need liquidity or want to go public with less risk than a traditional IPO. Large, highly leveraged private equity portfolio companies that need an equity infusion due to COVID-19, and large private family-owned companies that need an equity infusion due to COVID-19. This IPO gives Ackman the firepower to compete against big PE firms for the top deals. And with his hedge fund having returned 30% since January, despite the COVID-19 pandemic, he clearly believes that he has another major tranche of alpha to offer investors. So as usual, make sure you do your own due diligence before making any investment decisions. Stay safe and see you next week.